Well, if you've been on our Wednesday webinar series, this is the third time you have seen me. So I do cover a lot of topics here in the department, and one of them is land values. And that's been something that I've been looking at and tracking and publishing an annual book for, I believe, 5 years now. So what I want to start out today, I'm going to give you my key points and then kind of dive into each one of them. But was that as I was putting the land values book together this year, really the 2024 book that was published right at the end of the year, early 2025, what we saw is about what we expected, and that we had across the board some small increases in land values. There were some regions that did go down from 2023, and I will dive into that as we go through the presentation. But really something I noticed right away as I was going through the data was just there's less land on the market. And the big thing that I noticed was a lot more variability. So looking at even at a county level, just the amount of variability is always quite large between the minimum for non-irrigated crop ground and the maximum, we'll say. But I think even now we're just seeing even more variability than we typically do. The farm profitability or lack thereof would suggest that land values are either going to flatten, stay the same, or start going down. We know that farm profitability is very highly correlated to land value. But some things that we're seeing right now, obviously beef cattle prices are quite high. We're thinking as the economy, ag profitability is slowing down, but that's really on the grain side. The livestock side is doing quite well still. And then the large amount of government payments that are going to be received by farmers, what this will do to the land market. Really, it might suggest that we will not be going down just because of all the larger payments that are going to be seen. And I'll get into that as well. But I think in my career here in the department, which has been over 10 years now, I think the uncertainty or the cloudiness of the crystal ball that we have as to what's going to happen in this next year is probably worse than I've ever seen it, just as far as politically what's going on, conflicts around the world. There's going to be some very big uncertainty that we're going to be going through here in 2025. So let's just start with some fundamentals of what, and this will build into why land values are trending or going where I think they're going to go. Really, when we look at our crop prices across the United States, they have came up some since last fall when we saw lows at harvest time. But this is really fundamentally due to expansion of cropland acres in Brazil and Argentina. Those have really increased over the past decade, and that has really made it a lot more competitive environment for U.S. corn and soybeans. We've also been really good at producing corn and soybeans, even though here in Kansas, we've had a lot of drought issues, but as in general across the United States, we've seen pretty big crops, pretty large stockpiles as farmers have held on to those crops, waiting for some better prices. Add to that the strength of the US dollar. It's more expensive to buy our crops right now because of that strength. And obviously, politically, we're having a lot of tensions with our big trading partners. I listed China, Mexico, and Canada, but I think the EU or European Union could even be added to that list from some of the things that I've been reading this morning. Just to kind of give you some context, we typically export about 15% of our US corn crop and about 40% of our soybean crop. So those export markets are very critical for our crop prices here in the US. I think that probably goes without saying, but these three countries really make up the majority of all of our exports of our corn and soybeans. So what's going to happen with tariff, reciprocal tariffs, things that are coming down the pike, that is really gonna show us where these crop prices are going and then translate that into what is going to happen with agricultural land values as well. I'm going to give you just a little picture of what's going on or what's being projected at the national level and then bring that down to Kansas. So the USDA Economic Research Service puts out really their projections of net farm income or profitability in the ag sector. And they do this, they've been doing this for a long time. And looking at these graphs, you can really see the trends in the economy of agriculture. If you remember the good years here, I'm going to talk about how that produced the last run up in land values, one of the bigger run ups that we've seen in land values historically. But then we entered a pretty low time of profitability in agriculture. And as we came out of COVID, really the end of 2020, that's when things really heated up. We saw some really good crop prices and record profitability in the ag sector going back really to 1973. So these are inflation adjusted. But what I really wanted to use this for is look at the projections from 2024 to 2025. So these are in billions of dollars. You know, we would have expected those fall-offs, but as big as these recoveries are, it is quite eye-opening. And what's contributing to that? So ERS, Economic Research Service, recognizes that crop receipts, or the money that we're going to get from crops, is likely going to be down in 2025. They're saying about 2.3%. Just the corn and soybeans, lower price, lower amount of sales. Animal products, going to be up a little bit, 1.4%. I know some of the things that I've been reading, even yesterday, I was reading an article just on the size of the heifer replacement in the dairy sector is at an all-time low. And if you think about that, just a lot of dairies actually breeding to beef animals. Beef on dairy is what they call that, because the beef market is such in need of supply right now that it's pulling a lot of our animals out of the dairy industry into the beef industry, and replacement heifers are quite low right now. So interesting how those are interconnected. But the biggest thing here is the direct payments going to farmers. So most of that jump that you're seeing in what's projected in net farm income or profitability is because of those payments that we talked about in our first webinar of this series. If you missed that, it is on our Ag Manager website. But really, they're projecting $42 billion in direct payments to farmers. This doesn't include crop insurance or things like that. This is ARC and PLC. This is the payments again, the economic assistance payments we talked about in the first webinar, and then the disaster payments as well that was authorized to go out across the United States. So really what's holding up profitability or what's holding up farm income is those government payments. Now, what happens going forward from there? There has been talk of, if we do get into a trade war, some marketing facilitation type payments, so farmers aren't taking the fall of that again. You know, that is speculation at this point, but I do think the current administration is in support of doing that again if it would come down to a need for that. Now, the ERS also looks at a projection of real estate wealth or assets that are held by farms across the United States. And so the bottom in yellow here, non-real estate assets, that would be like your machinery, breeding livestock, things like that. And then all of the land holdings would be here in this darker blue color. One thing you can notice quite quickly, here's the 1980s and how much was made up in real estate value and how quickly that fell. The non-real estate really hasn't changed a whole lot throughout time, being inflation adjusted here. But as we saw increasing land values, you can see how quickly those real estate asset amount built on the balance sheet of the United States farming economy, and really how big that has been the last few years. If you just look at the billions of dollars in farm assets, inflation adjusted, that are being held right now versus non-real estate assets. And they are projecting that to grow from 2024 to 2025. About 3.7 trillion, that'd be about 4.3% growth in the real estate assets across the United States for farms. And that's about 1.8% above inflation. So, not to say that ERS has the crystal ball either, but really, given everything going on, the outlook is still quite positive in regards to farm income and asset values. Now, if we bring that a little closer to home here in Kansas, so this is our Kansas Farm Management Association numbers. This is net farm income that's not inflation adjusted. But I draw these lines here just to show, as I move forward, what profitability has done to land values here in Kansas. So these years were good, profitable years in agriculture, and that really fueled one of the bigger increases in land values that we've seen in recent years. And then we had this drop off from 2024 to 2025, and that was really one of the biggest drops in the history of this data, to go from a net farm income over to 100,000 to an average of less than 7. And as we crawled out of there during COVID, during the marketing facilitation payments and the trade war, we went back to, again, record profitability on average here in 2021. Now, I say on average because I know there's a lot of producers across the state that didn't see these good years because there was a lot of drought issues in our state. But overall, it was very positive. This fueled another escalation in land values. But where we go from here, I think will be interesting. So with the thing that we do have going for us a lot in Kansas is a lot of our farms are diversified by beef cattle, and especially the cow-calf sector right now. That is really going to help our farm income picture when the crop side is not going to be doing as well. We will have the 2024 number out in June. Our KFMA economists are hard at work now, working with producers on their taxes, and then we'll do that performance analysis and we'll have that number. But I also project in the Kansas level that we will be up again in 2025. And that's because this slide is from our webinar again a few weeks ago on just what the average numbers could be for those economic assistance payments to farmers. So again, those are paid on 100% of your planted acres from last year, about $42 an acre for corn and grain sorghum, $30 an acre for soybeans and wheat. So if you look at planted acres across the state, basically in the West, we're going to have some pretty high farm income numbers that these payments are going to be supporting. So almost $100,000 just in economic relief payments on average in the Northwest, a little smaller here in the eastern side of the state. But if you think about just adding those on top of net farm income, that's why I'm saying I would expect 2025 to actually be higher, just like is projected at the national level. So as we get into land values, I'm going to just start with the USDA numbers and then get into my own numbers with the land values book. So USDA numbers, these are the surveys that you might get in the mail. They come out every year. But the downfall is USDA only gives us one number for irrigated, dryland, and pasture for the entire state of Kansas. And as you know, Kansas is a very diverse state when it comes to production potential and Eastern versus Western, having some very different land values. But this trend this really helps us to evaluate the trend in land values as we look across the state. And as I mentioned a couple times, both at the national level and the Kansas level, this was the last big run up we had in recent years before the one we saw here in the last few years. Seeing irrigated 29% year over year increase, that is a huge, I would argue, unsustainable amount of growth in the land market. Non-irrigated being 25%, you can think about that as land really doubled in 4 years in the amount that it was worth. Pasture being a little bit less than that. But then when we hit 2014 to 2015, again, I showed in Kansas, that was the biggest drop in profitability we've ever seen. And we were worried in that time that we were going back to the 1980s and did the land bubble pop. And really things flattened out during those years. For a period of 6 years, we saw pretty stable, slightly decreasing land values. And then again, as profitability returned to the ag economy, we saw land values take off again. So we go further back in time using the same USDA number. These are the annual changes in land value. So what percent did land value go up or down from the previous year? And you can see the 1970s, how big those increases were. I talked about 1973 being one of the most profitable years in the ag economy here in Kansas. Well, look at what that did to land values. That was produce like a 27% increase in land value just in 1 year following that profitable year. So you can really see how that farm income does translate to increases in land values. These are the years that everybody either remembers or has heard about. When we went to 1985, we lost about 18% of the land value, 15% the next year, and 10% the year after. So that is really what's ingrained in our minds. As we went on past that, we've had kind of a more moderate, slower growth, sustainable growth rates. And then these last two run-ups, you can see there's a lot of years over years that we've had 15 or 20% growth in our land values. This is actually a lot better than we were projecting. After seeing that increase, we were worried we'd see this decrease. But overall, in these years, we held fairly steady. So I show that just to say, when we're entering the time that we are now with uncertainty and profitability, lower commodity prices, this is where I'm hoping to see maybe just a stabilizing of the land market, maybe going back to a slower, normal growth rate, but hopefully not be seeing some of this again, which I don't anticipate. If we want to just look at this cumulatively, so this was our average land value in 1950 here in Kansas. I don't know the number, but it's pretty darn small. And then without adjusting for inflation, just what have those land values done over time? So here, our land value in 2024 is about 3,000 an acre on average. But you can see the bubble of the 1980s and how that popped, and then compare that to the two most recent run-ups in land values. So overall, land is increasing a little over 5% per year in this time frame. Now, if we adjust that for inflation, obviously you can see why the 1980s were so devastating. But again, very comparable, if not even smaller than the run-up that we saw in 2010 to 2014, and comparable to most recently what we've seen. So the annual growth rate about 2% over inflation during this time frame. Now, those were state USDA numbers. So again, very good at looking at trends across a state, but not very good about knowing what any land is actually worth in any part of our state. So this is a book that, again, I've been putting out, I believe it's 5 or 6 years now, in cooperation with the Kansas Society of Farm Managers and Rural Appraisers. So the advantage of this book is we're not looking at survey data. We're looking at actual sales that have occurred all across the state of Kansas that involved agriculturally classified acres. Now, there's some information I don't know. I always get questions on wind leases, mineral rights, things like that. There's not that level of detail in the data that we're looking at. But I do know the county, the acres, and if it's irrigated, dry land, or pasture, and taking off any buildings or structures or things that are on that ground. I have linked the book here, and I'll have Rich drop it in the chat before I finish up here, but this is the link to our most recent book of 2024. Yeah, again, the source of this data would be from the Property Valuation Department in Topeka in cooperation with the Kansas Society of Farm Managers and Rural Appraisers. So these are all the actual sales that have occurred in Kansas. Now at the state level, just to compare to USDA numbers, so from 2023 to 2024, what I saw was about a 10% increase in irrigated ground. I'll dive into that in a little more detail of what's driving that. On non-irrigated crop ground, a little more of a moderate increase, 3.8% over last year, and then pasture about 2.7%. Now in the book, there are county level numbers. So if you go back to that link that I showed that Rich dropped into the chat, I'm only going to talk regionally here because I can't talk 105 counties in 30 minutes. But the beauty of that book is there's 9 sections to it, 9 different crop reporting districts of Kansas, and you can go to the county level, see the volume of sales that occurred in the county, the amount of acres that sold, the minimum, maximum, and average value for irrigated, non-irrigated, and pasture, if I had enough sales to put out a statistically significant number. So that is what I want everybody to go look at, is look at your own county numbers. Now I'm going to talk generally in the regions and what's going on. So the western side of the state, we saw some pretty good growth in the non-irrigated crop ground. The northwest and the west central having a little smaller amounts, about 2% over last year. But really southwest seeing one of the bigger increases across the state. And I know there's just a lot going on in that region because of the dairies, the feed yards. There's a lot of demand in that region. So I was not surprised to see that higher growth rate in that area of the state. The one to me that really stands out this year is basically the fall in the north central region. So down 13% from 2023. But I think a lot of this is due to the very extreme increase that we saw between 2022 and 2023. And that is the hard part of working with actual sales data, is it really depends what parcels sell each year and where those sales are concentrated. If you know anything about North Central, this side of the region is definitely a lot lower values than the Washington Clay Center side. So really, again, what is selling does make a difference. But overall, I think we're seeing a little bit of a market correction in that north central region because of the big jump last year. The other 2 regions, central being up about 10%, so they have seen kind of just a steady pace of growth over the last 4 years. We're here in South Central, we saw that big jump in 2022, and then kind of a flattening of the market ever since. So usually when I'm looking at a region like this, what I see is the north, the middle, and the south in the land values being spread like this. So I think we're getting back to kind of a normal spread of those land values versus what we were seeing in the last couple of years. On the eastern side of the state, I think Northeast is a region of its own. So it's a different world when we're looking at land values in this area. And that is why I say that is just the amount and then the growth. So basically, we're about $7,500 on average for non-irrigated crop ground in this Northeast region. And that is up 16% from last year. So the highest land values in the state and the most amount of growth in those land values. If we look at the other 2 regions of the state, Southeast had some pretty good growth as well. So those are actually very close, around $4,500 per acre on average for these 2 regions of the state. Now let's look at pasture and hay ground quickly here. Here's where we're starting to see a lot of that variability, as I mentioned. Really, when we look at the western side of the state, pasture is down from where we have been, not much, I would say pretty flat, but really coming off of and spreading out as we look at from north to south. So averages here for 2024, about $7,500 in the north, down here to about $1,400, $1,500 when we look at these other regions. Again, I really think the Southwest has just had a lot of strength due to the economic feed yards, dairies, things that have came into that region, that we see that is even higher than the West Central. Again, as we look at the central region, we see a drop in North Central like we saw in the non-irrigated crop ground, not quite as much, average around $2,500 an acre. And then the other regions of the state seeing a little bit of growth from 2023. Finally, on the eastern side of the state, again, growth across the board. most of our pasture that is sold is in these two regions. As we think about the Flint Hills of Kansas, what's happening here very much drives the state number. We did have a little anomaly in 2023. There just was not a lot of pasture sales in these high value counties. So I don't think it was actually down in 2023. I think it's a little more flat across the board in that Northeast region. Just diving in a little bit to irrigated crop ground here, really the regions of the state that contribute to this number. These are the acres that are sold in these crop reporting districts. 26,000 acres sold in Southwest. That is really the region that we see the irrigated sales. I also always track Northwest, West Central, and South Central, but really not near as many acres as we see there in Southwest. All other regions of the state added up to less than 4,000 acres of irrigated sales in 2024. As we look at those values, again, Southwest seeing a very big increase of $4,800 on average for irrigated crop ground. Now, as I say that, again, showing there is a ton of variability around this number. So that is the average, but it's not unheard of to see 7, 8, even 10,000 an acre for irrigated ground. But the other regions, a little bit of growth, just I would say maybe more of a flattening here in West Central. But again, there's just not a ton of acres that sell for irrigated. So the million-dollar question, where will land values go from here? These are my thoughts on what to watch and what will determine the answer to that question. Number one is how long will that lower farm profitability persist, specifically on the crop side? And number two, will economic relief payments or future marketing facilitation payments be enough to support land values? If that does support farm profitability enough, I would not anticipate any drop in the land market and probably a moderate growth in that price per acre. What else is going to be going on? So cattle prices. Right now we're at historically high. That's not good for everybody because we do have stockers and feed yards that are buying these high priced cattle and growing them and selling them. But when we look at the cow-calf side, this really does add support for pasture prices in the short run. When will the cow herd expansion occur? When will beef prices come down? Right now, from the things that we're seeing, that is not likely to occur, as it takes a while to retain those heifers and turn them into productive cows. So that will likely be a while down the road yet. But a couple other players in the market are likely some that you have been seeing, especially where we live here in Kansas, we see that, is hunting and recreational interest. This is not just on pasture. I've seen a lot of sales that have a very large amount of tillable crop ground also going to hunters outside of Kansas or others that are looking at the recreational interest versus the ag interest. I think that's going to be tied a lot to what's the general economy doing. So if we get into some situations where we don't have that extra money to be purchasing recreational property, that will bring us down a little bit. And the other side of that is investors. So what we saw when the stock market wasn't doing very well is land was looked at as a pretty stable investment if held over the long term. And still there's a lot of investors diversifying a portfolio, even if there are good returns right now in the stock market. So I always talk about these two groups of buyers as a double-edged sword. Because obviously, if we're sitting here from a farmer perspective, we're competing with these two groups. But also, we did not see a drop in the land market where I showed there where the farm profitability in 2015 fell out and we were worried we're going back to the 1980s. I think some of these groups help stabilize the land market so that it doesn't necessarily fall as we have issues in farm profitability or the ag economy. So that's why I consider these two groups a double-edged sword. So with that, I'm right on my 30 minutes. So if you have a question, go ahead and type those in the chat. I'll answer a couple questions here quickly, and then we'll turn it over to Greg. and I'll come back on at the end if there's additional questions that you think of in regards to land values. Susan, I do see your question in the chat there about any data on land being sold for hunting and recreation. We don't actually get to see who the buyer or the seller is of the parcels that we're using for the book. So I wish I could tell you that land is being sold at an X amount higher if it's going to an out-of-state recreational interest versus a farming interest. But even if we had that type of information, to me, the backup bidder is also very insightful. Who was bidding on that ground to get it to the level it's at, even if they weren't the ones that ultimately purchased it. And so I do think there is a lot of hunting and recreational driving those land values, but there's no way to actually quantify how much that adds. Do we have this information in other states? A lot of other states have similar information, but not necessarily running off of actual land sales like Kansas has here. A lot of other states do a survey through their Society of Farm Managers and Rural Appraisers and have really good land value information and cash rental information from that. So go to the extension service of any surrounding state and they will have likely something comparable to what we are publishing here in Kansas.